How to get a collateral loan. A collateral loan is also called a secured loan. With this type of loan, you pledge assets to back up the loan, which the lender can seize if you default. Since the lender has security, they are more likely to give larger loans with a lower interest rate over a longer period. Collateral loans are an option when you want lower interest rates for a large loan, have poor credit, or are considering cutting debt costs. Identifying possible collateral. Pledge your car as collateral. If you own your car outright, then you can get an auto equity loan. Generally, you can borrow 100% of your car's value, though this amount will differ depending on your credit history. If you have not paid off your car loan, then the car is currently serving as collateral for that loan. However, you might have paid off some of your loan. In that situation, you can get a new loan for a higher amount, using the car as collateral. Keep in mind that cars depreciate in value, so if you end up having to sell the car, you may not have enough to pay off the loan. Use your home as collateral. There are a couple types of secured loans you can get using your home as collateral, and there are many lenders willing to make these loans. Consider the following types. Home equity loan. You get a loan for a fixed sum of money and repay it in equal monthly installments. If you do not repay per your agreement, the lender can foreclose. Generally, you can get a loan equal to 85% of the equity in your home. Home equity line of credit. A HELOC operates like a credit card. You borrow as much as you need, up to the limit set by your lender, and make payments on the amount you borrow. Typically, you can borrow up to 85% of the equity in your home. If you default, your lender can seize your home. Offer your savings account as collateral. Some banks extend loans to customers who have a savings account with them. Because the account secures the loan, you generally cannot access the account until you pay the loan back. You can also use a certificate of deposit as collateral for a bank loan. 4. Pledge personal property as collateral. You can get a secured loan using all kinds of assets as collateral. Consider any personal property that has value and which you own, such as the following: watercraft, motorcycles, equipment. 5. Furniture, computer. Pledge stocks and other investments as collateral. If you have investments with a private bank or investment broker, then they may lend you money using your accounts as collateral. Often, you can get a loan up to the full amount of your account. Use future paychecks as collateral. Some banks will give you a cash advance loan or salary advance loan backed up by your future paychecks. Generally, these are short-term loans, due when you receive your next check. Many lenders offer legitimate salary advance loans. Do not confuse these with payday loans, which have sky-high interest rates and are illegal in many states. Payday lenders tend to operate out of storefront offices, like pawn shops. By contrast, banks and credit unions offer salary advance loans. Pledge business assets as collateral. Businesses can use many assets to secure a loan for their business. For example, a client might issue a large purchase order for product. To fulfill the order, you need to hire staff or make other investments. Banks will often lend against your assets, such as accounts receivable or inventory.